What if the path to getting rich has nothing to do with a paycheck, a promotion, or even working harder? I know, it sounds like another guru fantasy. We're all buried in bills and just trying to make it to Friday. But what if the game we're all playing is designed for us to lose? The answer lies inside the Almanack of Naval Ravikant, and we're about to shortcut right to it. What if the path to getting rich has nothing to do with a paycheck, a promotion, or even working harder? I know, it sounds like another guru fantasy. We're all buried in bills and just trying to make it to Friday. But what if the game we're all playing is designed for us to lose? Welcome, everyone. Today, we're talking to a book that's more of a philosophy, the Almanack of Naval Ravikant. And I have to be honest, the central premise that anyone can build wealth feels a little detached from reality. You say, seek wealth, not money or status. For most Americans, money is the goal. It pays the rent, it puts food on the table. What's the practical difference, and why should someone already struggling care?
You're asking the most important first question. The distinction is everything. Money is how we transfer wealth. It's the paychecks you get, the cash you use, it's ephemeral. But wealth is the thing that works for you while you sleep. It's the factory, the software, the asset that earns while you're on vacation. Chasing money means you're renting out your time. Chasing wealth means you're buying back your time. It's the difference between being a cog in the machine and owning the machine.
Okay, owning the machine. I get the concept. But let's get real. The brief I'm looking at says that as of 2024, the top 10% of American households own over 67% of the country's wealth. The bottom 50% own just 2.5%. So when you talk about owning assets, aren't you just talking to the people who already own everything? For the average person, their only asset is their ability to work, and they're trading it for a paycheck because they have no other choice.
That statistic is precisely why this distinction matters more for the average person than for the wealthy. The system is skewed, I agree. Trading time for money is a trap, and that data proves it. The way out isn't to work 10% harder for a 3% raise. The way out is to start thinking about how to build a tiny piece of equity. It doesn't have to be a factory. It can be a piece of software, a popular podcast, an online course. The first, most crucial tool is to understand what your time is actually worth. If you don't value your time, no one will. So the tool is the Aspirational Hourly Rate. Set a ridiculously high hourly rate for yourself. Say, $500 an hour. Now ask yourself if the task you're doing is worth $500. If it's arguing online, mowing your own lawn, or assembling furniture, the answer is no. This forces you to see time as your most precious resource, the one you must invest in building wealth, not just spend on earning money.
You talk a lot about leverage, specifically code and media, as the great equalizer. The idea is that anyone with a laptop can create something that reaches millions. It sounds great, and we see the rise of the creator economy, which the data says is a $50 billion market in the US. But for every one success story, there are thousands of people posting videos to an audience of 3. How does a regular person, with a full-time job and a family, realistically use this leverage without just burning themselves out for a hobby that never pays off?
The mistake is thinking the goal is to become a famous influencer. That's a status game. The goal is to scale your judgment and skills without permission. Code and media are permissionless leverage. You don't need a boss to tell you to start a blog, a newsletter, or a niche software tool. You start by packaging what you uniquely know. It's not about being famous. It's about serving a small, dedicated audience with something they can't get elsewhere. The power is that the marginal cost of reproduction is zero. It takes the same effort to write a newsletter for 100 people as it does for 100,000.
Okay, but let's talk about the financial reality of that. My research shows that while the creator economy sounds liberating, a 2024 survey indicates that gig economy workers are more likely to face financial hardship than other adults. Nearly half of them wish for a more stable, predictable income. So this path of permissionless leverage often leads to more precarity, not more wealth. It sounds less like freedom and more like a second, unpaid job with a lottery ticket attached.
That's because they are still thinking in terms of trading time for money. They are driving for Uber, delivering for DoorDash. They are renting out their time using someone else's platform. They haven't escaped the trap. They've just found a more flexible version of it. True leverage is not about the gig, it's about building an asset. The actionable tool here is to productize yourself. Don't just be Jane, the marketing consultant. Instead, Take your marketing knowledge and build the 5-day startup SEO kit. Sell the product, not the time. Your specific knowledge becomes an asset that can be sold, reviewed, and scaled while you sleep. That's the difference between being a gig worker and being a business owner. The data on subscription-based creators earning nearly $95,000 a year on average proves that building a predictable, asset-based income is possible. It's about creating a product from you, not a service of you.
This brings me to another one of your core tenets, specific knowledge. You define it as something that can't be trained but can be learned, found by pursuing your genuine curiosity. This sounds wonderful, like follow your passion. But for a young person today staring down the barrel of massive debt, this feels like a luxury they can't afford. How do you tell someone with $80,000 in student loans to go follow their curiosity instead of taking the safe, high-paying corporate job that will actually service that debt?
It's not about follow your passion into poverty. It's about finding the intersection of what you're innately good at, what you enjoy, and what society is willing to pay for. Specific knowledge isn't a whimsical hobby. It's a highly valuable, almost monopolistic skill that feels like play to you but looks like work to others. It's often found at the edges of disciplines, the engineer who understands marketing, the artist who can code. You don't have to quit your job tomorrow. You cultivate it on the side in your free time. An hour a day. Let your curiosity lead you, but keep your eyes on the market.
Even cultivating it on the side is a risk. One study I have here is damning. It found that for every 8% increase in student loan debt, the number of new businesses in a county drops by 70. Debt actively kills entrepreneurship and the pursuit of this specific knowledge. People are shackled. They can't afford the risk of spending an hour on a side project when they could be driving for Uber to make a debt payment. Your advice seems to ignore the crushing weight of modern financial obligations.
The debt is a very real constraint. It's a weight designed to keep you in the time for money trap. But this makes finding and developing specific knowledge more urgent, not less. It's your only real way out. The tool here is the specific knowledge test. As you consider a new skill or a side project, ask yourself one question. Can this be taught in a classroom or a corporate training session? If the answer is yes, it's not specific knowledge. Anyone can learn it, so the market will commoditize it and drive the price down. But if the answer is no, if it's a unique synthesis of your skills, your obsession with 17th century cartography, and your ability to write Python scripts, then you've found a vein of gold. The debt makes the safe path seem appealing, but that path often leads to a dead end of capped income. The riskier seeming path of developing your unique obsession is the only one with unlimited upside.
Let's talk about accountability. You say to embrace it, to take on risk under your own name to gain equity and leverage. Essentially, start a business. But this sounds like classic survivorship bias. We hear about the successes, but the data is brutal. For 2023, 23.2% of new businesses failed within the first year, the highest rate in 15 years. Is it responsible to tell people to take on all this personal risk when failure is the most likely outcome?
Accountability is not a blind leap into the abyss. It's taking skin in the game. When you work for someone else, you have limited downside. You probably won't go to jail if the company fails, but also limited upside. Your salary is your cap. Taking accountability means you have uncapped upside and also uncapped downside. The key is to manage the downside. You don't bet the farm on day one. You take small, calculated risks. You launch a small product. Test the market, iterate. The goal isn't to avoid failure. The goal is to fail cheaply, quickly, and learn from it. Each small failure is a lesson that gets you closer to the one success that can pay for all the failures.
But people do bet the farm. They take out second mortgages. They drain their savings. And I'm looking at even more data here. In the first quarter of 2024, venture-backed startup shutdowns surged by 58%, hitting a 10-year high. Even the smart money is failing at an incredible rate. So your idea of failing cheaply seems to contradict the reality that even well-funded, professionally managed ventures are collapsing. How does a solo entrepreneur stand a chance?
Those venture-backed companies are playing a different game. They take huge sums of capital and are forced into a grow-at-all-costs mindset. That is not the game I advocate for the individual. The individual's advantage is patience. You are not beholden to a board of directors demanding quarterly growth. You can play a long game. The tool here is the long-term game identifier. In any venture, in any relationship, ask, Are the people involved playing a short-term game or a long-term game? Short-term players are transactional, they optimize for immediate gain, and they will sacrifice relationships to win. Long-term players know that all the real returns in life and wealth, relationships, and knowledge come from compound interest. So associate with people who have high integrity and a long-term outlook. Build your business slowly, sustainably with people you trust. That is how you survive, and eventually thrive, while the VC-fueled rockets burn out.
Perhaps your most controversial idea is that happiness is a skill or a choice. I want to push back on that, hard. We live in a country facing a mental health crisis. In 2024, nearly a quarter of all American adults experienced a mental illness. People are not just having a bad day, they are dealing with clinical depression, anxiety, and trauma. To tell them happiness is a choice can sound incredibly dismissive, even cruel. How do you defend that statement in the face of such widespread, genuine suffering?
This is a point that is easily misunderstood, so I appreciate the chance to clarify. It is not about dismissing clinical conditions, which are real and often require professional medical help. The statement happiness is a choice is not for someone in the midst of a clinical crisis. It is a preventative tool and a daily practice for everyone else. It means recognizing that our default state does not have to be one of striving, dissatisfaction, and anxiety. Happiness is the absence of desire, particularly the desire for external things to change. It's an internal skill, not an external event. You can practice it, just like you practice an instrument. It's the skill of not letting your mind be dragged around by every event, every headline, every perceived slight.
But the external events are not just perceived slights, they're real. I'm looking at a 2024 poll where 43% of Americans say they're more anxious than last year. And what are they anxious about? The economy 77%, elections 73%, gun violence 69%. These aren't internal desires. They are legitimate fears about the stability of the world around them. To suggest that an individual can simply choose to be happy by managing their internal state seems to ignore the very real, very powerful external pressures that are making people sick with worry.
You cannot control the economy or the elections. To attach your emotional well-being to things you cannot control is to guarantee misery. This is the core of the practice. Acknowledge the external reality, but focus fiercely on what is within your control, your response. The tool for this is recognizing that desire is a contract you make with yourself to be unhappy until you get what you want. You signed a contract that says, I will be unhappy until the economy is fixed. Why would you sign such a contract? You can choose to terminate that contract. This doesn't mean apathy. You can still vote, build your business, and protect your family. But you refuse to give these external forces power over your inner peace. That is the choice. It is difficult, it requires practice, but it is a choice. A powerful happiness practice is simply to sit in silence and notice how many of your thoughts are about the past or the future. The more you can anchor yourself in the present moment, the less power those anxieties have.
You champion the idea of playing long-term games with long-term people. It's about compounding returns in relationships and careers. That makes sense in a stable world. But for many Americans, particularly millennials and Gen Z, the world doesn't feel stable. They've lived through multiple recessions, a pandemic, and now a rapidly changing job market with AI. The job for life is dead. How can someone commit to a long-term game when the game board itself seems to be reset every few years by forces outside their control?
The instability you describe is precisely why playing long-term games is more important than ever. You are correct, the job for life at a single company is gone. That was a fragile, dependent model. The new long-term game is not played with a corporation. It is played with people, and it is played with your own skill stack. The compounding happens in your reputation, your network of trusted collaborators, and the depth of your specific knowledge. A company can lay you off, but it cannot take away your reputation or your skills. The long-term game is about building a foundation that is portable and resilient, independent of any single employer.
That's a nice reframing, but the logistics are a problem. Your philosophy heavily favors freedom and autonomy, which often means remote or hybrid work. But as of 2024, nearly a third of employers, 3.8 to be exact, offer zero remote work opportunities. So millions of people are still tied to a specific location and a traditional office structure. They can't just play a long-term game with a global network of collaborators if their boss requires them to be at a desk in Omaha from 9 to 5. Their ability to play this game is fundamentally restricted by their employer.
This is a filter. The companies that demand presence for presence's sake are revealing themselves to be short-term players. They are managing by input hours in a chair instead of output valuable work. The data also shows that over 2/3 of companies do offer remote options, and that these are often the higher-paying, higher-skilled jobs. The actionable tool here is compounding effect application. Don't just apply it to money. Apply it to your network. Every day, do one small thing to add value to your network without expecting anything in return. Forward an interesting article. Make a helpful introduction. Share your knowledge publicly. These small daily deposits into your reputation account compound. Over time, this builds a gravitational pull. Opportunities, including those from long-term, remote-first companies, will start coming to you. You build the career you want by becoming the person that career needs.
Let's dig deeper on time. You say it's our most valuable asset and we should guard it fiercely with a high hourly rate. But for a huge portion of the population, that's an unimaginable luxury. They're not deciding between delegating a task and doing it themselves. They're deciding between working a second job or not paying the electricity bill. How can someone who is fundamentally time poor apply this principle without it feeling like a cruel joke?
If you are time poor, then valuing your time is the most important thing you can do. It's not a luxury. It's a survival tactic. The principle is not about immediately outsourcing everything. It's about changing your mindset. It's about recognizing that the hour you spend scrolling on social media or watching another episode is an hour you didn't invest in learning a skill that could get you out of the time poverty trap. The less free time you have, the more ruthless you must be in protecting it for high-value activities.
But even if they're ruthless, the math just doesn't work for many. My brief points to the crushing cost of living in major U.S. cities like New York and San Francisco. Even with nominal wage growth, people's actual purchasing power is stagnant or declining. They work more hours just to stay in the same place. This isn't a mindset problem, it's an economic reality. They are literally trading every available hour for money because they have to. Where is the time for high-value activities supposed to come from?
The time must be clawed back, minute by minute. It may mean waking up an hour earlier. It may mean giving up a source of entertainment. The sacrifice is real. I don't deny that. But the alternative is to remain in the trap forever. The tool is, again, the aspirational hourly rate, but applied as a filter for your attention. Before you start any task, ask, is this worth $500 of my time? This isn't about outsourcing. It's about making a conscious choice. Is watching this TV show worth $500? Is this pointless meeting worth $500? Is getting into this argument worth $500? The answer is always no. The act of asking the question itself reclaims your agency. It forces you to see the trade-offs you are making. Even if you only reclaim 30 minutes a day to read or learn a new skill, that's 182 hours in a year. Compounded over years, that is your escape hatch.
A common critique of your philosophy is that it suffers from a massive survivorship bias. You are an incredibly successful venture capitalist and entrepreneur. You've won the game, so it's easy for you to lay out the rules. But doesn't this perspective inherently discount the role of luck, privilege, and background? How much of your advice is genuinely universal versus being a playbook that only works for people who start with a winning hand?
Luck is a huge factor. I've been very lucky. Anyone who denies the role of luck is lying to you or to themselves. But there are 4 kinds of luck. The first is blind luck, like being born into a good family. You can't control that. The second is luck from hustling, from stirring the pot and creating opportunities. The third is luck from being very good at spotting it, from being an expert in a field and seeing a break others miss. And the fourth, the best kind, is luck that finds you. It's building such a unique character, a unique brand, a unique mindset, that luck becomes your destiny. You've built a specific kind of bait that only a certain kind of fish will bite. My philosophy is not about ignoring luck. It's about becoming the kind of person who gets lucky. It's about maximizing your surface area for good fortune.
Okay, becoming the kind of person who gets lucky, but even that requires making good decisions, what you call judgment, and critics would argue your advice on how to build that judgment, like taking risks, is itself a product of privilege. As one perspective I read notes, your advice to embrace risk assumes a financial safety net that most people simply don't have. For them, one bad decision, one failed risk, isn't a learning experience. It's a catastrophe. Isn't good judgment just a luxury of the wealthy?
Judgment is a skill, and like any skill, it is built through practice. The wealthy don't have better judgment. They have a higher tolerance for the consequences of bad judgment. You can build judgment without betting the farm. You do it by reading voraciously, by studying mental models, and by making small, reversible decisions. The most powerful tool for building judgment, especially when you feel stuck, is this: when faced with a difficult choice, pick the one that is harder and more painful in the short term. The easy path now almost always leads to a harder life later. The harder path now, the workout, the difficult conversation. Learning the complex skill builds strength and opens up easier paths later. This isn't about financial risk. It's about choosing short-term pain for long-term gain. Anyone, regardless of their financial situation, can apply this principle.
You advocate for a specific reading diet, read what you love until you love to read, and focus on foundational text science, math, philosophy over fleeting news. In an age of information overload, this is appealing, but it also seems impractical. Professionals in many fields, finance, law, tech, marketing, have to stay on top of current events and industry news to do their jobs effectively. Isn't this read the classics approach a recipe for becoming irrelevant in a fast-moving world?
There is a difference between information and knowledge. The news, social media feeds, and most industry chatter are information. They have a short half-life. The information you consume today is worthless in a week. Knowledge is foundational. It's the principles of microeconomics, the laws of physics, the concepts of evolutionary biology. These have a long half-life. They will be true 100 years from now. If you build your foundation on these timeless concepts, you'll be able to interpret the fleeting news with far more clarity and accuracy than someone who just chases headlines. The goal isn't to ignore the present, but to understand it through the lens of the eternal.
I'll grant you the philosophical point, but again, let's talk about the person on the ground. The marketing manager whose job depends on knowing the latest TikTok trend, the developer who needs to know about the newest JavaScript framework. Your advice, as some critics point out, can feel overly abstract and philosophical. It lacks concrete, step-by-step guides. So, what's the tangible action? Do they just stop reading industry blogs and pick up Plato? How do they balance this without getting fired?
It's not a binary choice. It's about resource allocation. The tool is a simple reading strategy, 1 hour a day. That's it. For that 1 hour, you read from foundational books. Not blogs, not news, not social media. Pick up a book on persuasion, on logic, on biology. Read the original source material. The other 23 hours of your day, you can be as plugged in as you need to be. But that one protected hour is your long-term investment. It's what builds the latticework of mental models in your head. Soon, you'll see that the new TikTok trend is just a repackaging of a Cialdini principle of influence. And the new JavaScript framework is solving a problem that was first outlined in a 1970s computer science paper. You stop being a reactor to the new and become a predictor of the what's next because you understand the what's always been.
A key part of your strategy for building wealth is to escape competition through authenticity. Find what you're uniquely good at, and you'll have no rivals. This is a beautiful idea, but it seems to run up against a harsh reality: systemic barriers. A person's race, gender, class, or where they grew up can create enormous headwinds that have nothing to do with their authenticity. A brilliant idea from someone without the right credentials or social network might go nowhere. Doesn't this advice ignore the very real, unlevel playing field?
The world is not a fair place. Systemic biases are real. Authenticity is not a magic wand that erases them. However, it is your most powerful weapon against them. If you try to compete in a generic, well-defined field, say, as a standard investment banker, you will be judged by a standard scorecard, and that is where biases thrive. They will look at the name of your school, your family connections, your social fit. But when you create a category of one, when you are the only person at the intersection of 3 or 4 different domains, there is no one to compare you to. You are the standard. You are the expert. Your unique output becomes your credential.
But who decides what's valuable? The social critique of this intense individualism is that it ignores the power structures that define value. Your unique output is still judged by a market shaped by those same systemic forces. For example, the data shows that 52% of remote companies are more likely to hire independent talent than non-remote ones, which is great. But who owns those companies? Who is doing the hiring? If the gatekeepers are still from the same privileged backgrounds, aren't they just going to value authenticity that looks and sounds familiar to them?
You're thinking of a centralized market. The internet allows for a decentralized one. You don't need to convince a single gatekeeper at a large company. You can appeal directly to a niche audience of 1,000 true fans who value exactly what you do. The tool is the authenticity filter. It's a question you ask yourself. Is this something I am uniquely obsessed with that feels like play to me but looks like work to others? If you are genuinely, authentically obsessed with a topic, your enthusiasm will be infectious. It will attract others like you. The internet allows those people, scattered all over the world, to find you. You're not trying to get hired by a gatekeeper. You're creating your own small economy around your authentic obsession. This is the ultimate circumvention of traditional power structures.
Let's talk about personal sovereignty, the idea of being self-sufficient and in control of your own life. The gig economy is often sold with this promise of freedom, but for many, it's a raw deal. I'm looking at 2020 for data showing the average weekly pay for an Uber driver actually decreased by 3.4% while their hours worked increased. They took on the accountability of being an independent contractor, but they're earning less for more work, and they're completely at the mercy of Uber's algorithm and pricing. Isn't this sovereignty just an illusion where the platform is the new boss?
That is a perfect example of false leverage. The Uber driver is not sovereign. They are a fungible commodity in a system designed by someone else. They own neither the platform, the code, nor the customer relationship, the media. They have no specific knowledge that is hard to replace. They are renting their time and their car. This is the opposite of my philosophy. Personal sovereignty comes from owning the means of production. And today, the most potent means of production are code and media.
So, the dream of freedom sold to millions of gig workers is essentially a lie. The problem I see is that the path you advocate, building your own platform, your own media, is incredibly difficult and takes a long time. The Uber path is available tomorrow. You're telling someone who needs rent money next week to ignore the immediate cash and instead start a 5-year project to build a niche media brand. The gap between the problem and your solution seems vast.
I'm not saying it is easy. I am saying it is the only path that leads to the destination you want. The Uber path is a treadmill. It will never lead to freedom. You may have to be on the treadmill to survive today, and that is a reality. But you must be building your escape route at the same time. The tool is the leverage test. At the end of each week, ask yourself, did I apply any leverage this week to amplify my efforts? Am I using labor hiring someone even for a tiny task? Am I using capital investing money into an asset? Crucially, am I using code or media, writing one blog post, recording one 5-minute video, automating one small task? If the answer is no every week, you are running in place. If you can answer yes, even in a small way, you are building your ladder out of the trap.
I want to end on a bigger, more philosophical challenge. We've talked about building wealth, finding happiness, and gaining freedom. But from a more critical, anti-capitalist perspective, isn't this entire philosophy just a sophisticated guide to winning a rigged game? Instead of questioning the system that creates so much inequality and anxiety, you're just offering an instruction manual for how individuals can climb to the top of it. Does this philosophy inadvertently make people more accepting of a broken system by focusing their energy on personal success rather than collective change?
That's a valid and profound critique. My focus is on the individual because that is the only locus of control you truly have. You cannot will a new political or economic system into existence. You can, however, change your own actions, your own mindset, and your own life. The world is a complex, dynamic system. The best way to improve the system is to improve its constituent parts, the individuals. A society of sovereign, wealthy, and peaceful individuals is a better society. A nation of people who are not desperate and trapped in jobs they hate is a healthier nation.
But that feels like a trickle-down theory of social change. If I get rich, the world is better. History is filled with wealthy individuals who did not make the world better. The critique is that your advice to avoid competition and get away from cynics could lead to a very isolated, echo chamber existence. You get your wealth, you find your peace, and you disengage from the messy, collective problems of the world. Isn't there a danger that this is just a very elegant justification for selfishness?
It's only selfish if you stop there. The ultimate goal is not just to become wealthy, but to become free. Free from want, free from anger, free from being forced to do things you don't believe in. A person who has achieved this state is in a far better position to help others than one who is trapped and desperate. You cannot pour from an empty cup. The final tool is simply the application of all the others to a higher purpose. Once you have built wealth through specific knowledge and leverage, once you have found internal happiness, what do you do with it? You contribute. You create. You teach. You fund the things you believe in. The point is not to retreat from the world, but to re-engage with it on your own terms, from a position of strength and generosity, not weakness and need. First, you put on your own oxygen mask. Then you can help everyone else on the plane.
So, the journey starts with individual liberation, but its purpose, you argue, is to enable a more meaningful contribution. It's a challenging, deeply individualistic, and undeniably compelling philosophy. Thank you for this conversation.
The path is yours to walk.